Welcome to the Moving Markets podcast on Tuesday, the 10th of February, with me, Bernadette, and Anderko. With new record highs being set by the Dow Jones and the Nikkei 225, I'm looking forward to catching up with Mike Rauber this morning to discuss the latest global markets moves. And after that, I'm delighted that Carsten Menke, head of Next Generation Research, is joining me here to talk about what to make of the current volatility in precious metals markets and also what he expects going forwards. But first, let's catch up with the key news from the last 24 hours. Good morning to you, Mike.
Good morning, Bernadette.
So the US equity session yesterday started on a pretty lacklustre note, with investors waiting for January's job report on Wednesday and obviously inflation data on Friday. But the major indices ended on a positive note, didn't they?
Yes, so US stocks rose between 0.5% and 1% on the day. The S&P 500 closed near a record high. Tech and AI stocks led the move higher, supported by a rebound in software. Now, sentiment improved after positive news from the OpenAI ChatGPT ecosystem, including a memo from Sam Altman citing a return to 10% monthly growth, and an upgrade of Oracle, which pushed its shares up nearly 10%.
And we've seen the major hyperscalers announcing large capital expenditure plans alongside their earnings, haven't we? I mean, yesterday, Alphabet raised funds in the bond market and its US dollar bond sale drew more than $100 billion in orders, didn't it?
Yeah, huge sums we're talking here. Pricing on the longest US dollar bond due in 40 years tightened from a spread of 1.2% initially to 0.95% above treasuries. The company raised $20 billion above the initial $15 billion it aimed for. So investors clearly couldn't get enough of Alphabet bonds. And today, Bernadette, it may launch debut deals in Switzerland and the UK, including a rare 100-year bond. That's at least according to Bloomberg. Now, that would be the first attempt by a technology company to issue such debt since the late 1990s dot-com era.
Okay, well, we'll have to watch out for that then. And meanwhile, we need to mention currencies, don't we? The week opened with broad US dollar weakness. The euro climbed above 119 against the dollar, and the greenback fell more than 1% against the safe haven Swiss franc. So what's the story, Mike?
Yeah, it's difficult to say, but maybe two aspects to consider. Now, first, talk of a possible new Treasury US Federal Reserve Accord under Governor Kevin Warsh, even without concrete news. And a Bloomberg report that Chinese regulator instructed financial institutions to cut US Treasury holdings due to concentration risk and volatility. They both weighed on the US dollar. And the Chinese yuan reached its strongest level since May 2023. Now, this aligns with a broader trend. US dollar short positions more than doubled last week, signaling expectations of further US dollar weakness.
And before we began the podcast today, you were mentioning that the situation around the pound is a bit more complicated. So perhaps you could explain that for our listeners.
Yeah, the pound's rise against the US dollar hid weakness elsewhere. It fell against the euro. The 10-year gilt yield rose, and UK equities were flat in an otherwise strong European equity market. The leadership crisis around Prime Minister Keir Starmer and the resignation of key advisors unsettled investors, worrying about a shift to the left.
And you just mentioned Europe briefly there. I see the broad Euro Stock 600 gained 1% yesterday.
Yeah, so markets were flat for most of the day, but gains in New York lifted Europe into the close. European banks helped, with Italy's UniCredit up more than 6% after reporting a 10% rise in fourth quarter profit and pledging to return 50 billion euros to investors by 2030. In other company news, Novo Nordisk, it gained over 5% after the company, him and hers health, said it would stop offering its pill using the same active ingredient as Wegovy, following legal threats from the Danish company.
All right, let's move over to Asia now. Asian shares over 1% higher following Wall Street.
Yeah, absolutely. So an index of regional technology shares is at an all-time high this morning. Taiwan Semiconductor reported a 37% sales rise in January, its strongest in many months. Adding to the momentum, Bernadette, Japanese shares are surging more than 2%, again at an all-time high, extending their election-fueled rally. Now, shares in Japan also are gaining support from the lack of major moves in the Japanese yen and government bond yields, indicating no sharp market reaction to the government's spending plans.
Okay, looking ahead, what else should we be expecting, Mike?
So not much economic data releases today out of Europe. In the US, we get the US Small Business Optimism Index and US retail sales. Now, in earnings, the oil company BP is in focus. It's said today that it will suspend share buybacks. Other companies reporting today in Europe include AstraZeneca, Ferrari, and Kering. And later in the US, Coca-Cola will release its results. That's all from me.
Thanks very much for the news update this morning, Mike.
Thanks for having me, as always, Bernadette.
Right, now it's time to turn to Carsten. Good morning to you.
Hello, Bernadette. Good morning.
So, Carsten, the volatility in the precious metals market remains elevated. Towards the end of last week, there was a major drop in the silver price, the second largest ever. But prices regained lost ground rapidly. So where do we stand?
Well, I think that the dust of the sell-off is still settling and the markets are trying to find a new equilibrium. So following such massive market moves, this is typically a very volatile process, particularly for silver, which is notoriously volatile. Keep in mind, the price doubled within 8 weeks and then suffered its two largest daily drops within 1 week.
And was there any specific news flow that was actually causing these latest moves?
For last week's sell-off, we struggled to single out any specific news. As outlined before, these swift and sharp swings, they cannot be explained by changing fundamentals. They are all about flows, in particular in the Chinese futures market. For the rebound this week, I think it is also less clear. Mike mentioned it before. We had this news on Monday that Chinese regulators were advised or have advised local banks to curb holdings of US Treasuries due to market risk. And of course, in the precious metal markets, this was quickly related to the de-dollarization narrative, and I think that helped prices regain lost ground yesterday.
Which role did the margin increases of the future exchanges in New York and Shanghai play in the sell-off? Because some say this sell-off was orchestrated by the futures exchanges.
Well, that is quite a common narrative, but I don't think it's true. Margins are essential for the proper functioning of the futures exchanges, which settle daily gains and losses in cash. And to facilitate this settlement, sufficient cash needs to be in the traders' accounts, and that's the margin. So if prices rise and volatility picks up, the dollar amounts are naturally higher. And just to put it into perspective, since 2010, there were almost 100 margin adjustments in the New York futures market. 60% were up, 40% were down. And while the initial impact of an increase is down by around 6% on average, prices are breaking even again after 10 to 20 days. So there is no lasting negative impact on prices from margin increases, as there is no lasting positive impact from decreases.
All right, then let's move away from the futures market. What's the state of the physical market?
Well, see, the most readily available data comes from physically backed products, so ETFs that buy gold and silver bars on behalf of the investors. For gold, we've witnessed moderate outflows, I would say, since the price peak at the end of January, potentially signaling some profit taking. This has initially also been the case for silver, but flows have meanwhile reversed, signaling some bargain hunting after the sell-off.
All right, then, well, I have to ask, what's the bottom line then, Carsten?
I think that investors in the precious metal markets, they need to brace for more volatility. The markets will need more time to find their footing. But what should not be forgotten, I think, is that the fundamental backdrop is generally still favorable.
Super. Okay, Carsten, very interesting. Thanks very much for joining us today. And I'm sure we'll have you on again soon.
Thanks for having me. Bye-bye.
Well, that brings today's show to an end. Thanks to Mike and to Carsten for joining me today. And of course, thank you for listening. Please do tune in again tomorrow when Helen Freer will be back as your host with, again, more of our experts to discuss what's moving markets. So don't miss that. Meanwhile, good luck today and goodbye for now.
The information and opinions expressed in this podcast constitute marketing material and are not the result of independent financial or investment research. please refer to www.juliusbaer.com/legal/podcasts for further other important legal information.